IREN stock had a rough finish to the week, closing Friday down $4.08 or 6.39% to end the session at $59.77 per share. The decline came as global markets sold off on renewed trade war fears between the United States and China, which triggered a broad risk-off move across the entire technology and AI infrastructure sector. The reaction was sharp but not surprising. When investors start to worry about tariffs, export bans, or geopolitical friction, they tend to sell first and ask questions later. And in that kind of environment, even strong companies like IREN can get caught in the crossfire. To understand what happened today, you really have to look at the bigger picture. This was a macro-driven pullback, not a company-specific event. Headlines overnight pointed to the possibility of new restrictions on advanced chip exports, sparking a sell-off in semiconductor names and everything connected to the AI supply chain. Nvidia, AMD, and Supermicro all fell between 3 and 6%, and that weakness spread to the broader market. The S&P 500 ended lower, Treasury yields dipped as investors moved to safety, and energy and utilities were the only sectors that finished green. In short, fear about the global trade environment was the driving force behind Friday's losses, not anything to do with IREN's own operations or outlook. For IREN, the timing of the sell-off came after an incredible run. Over the past 2 weeks, the stock had surged by almost 30%, hitting new all-time highs earlier this week and closing Thursday up more than 6% at $63.85. After that kind of move, it's completely normal to see some profit-taking. Many short-term traders and algorithmic funds took advantage of the weaker tape to lock in gains ahead of the weekend. Long-term holders, meanwhile, largely stayed put. The key takeaway here is that nothing fundamentally changed about the company itself. Today's decline was driven entirely by market sentiment and positioning, not by any deterioration in IREN's business. The company has not released any new filings, guidance updates, or contract changes. Its AI cloud expansion, its partnership with Nvidia, and its data center build-outs in Texas and British Columbia all remain on schedule. The new multi-year AI cloud contracts announced earlier this month, covering about 11,000 GPUs and worth roughly $225 million in annual recurring revenue once fully ramped, are still progressing. There's been no revision, no cancellation, and no negative commentary from analysts or customers. That's important, because it tells you that the business engine is still running smoothly beneath the market noise. So if we strip away the macro noise, what really happened today is simple. Investors rotated out of high-growth names temporarily. When fears about trade or interest rate spike, capital flows into defensive sectors and away from cyclical or high-beta plays. The AI infrastructure sector, which has been one of the strongest performers this year, is naturally more sensitive to those shifts. But those rotations rarely last long. Once the immediate shock passes and investors realize that the underlying fundamentals haven't changed, they often come back into these same names even stronger. It's also worth remembering that IREN has become tightly correlated with the broader AI ecosystem. When Nvidia sneezes, many of these related stocks catch a cold. Today was one of those days. Nvidia fell several percent on renewed export worries, and the selling rippled outward to companies that provide AI data center capacity. But here's the nuance. Any restrictions that make it harder to export high-end chips to overseas markets could actually boost domestic infrastructure demand over time. If companies in North America need to localize more of their compute resources, firms like IREN that already have scalable, power-efficient data centers in the region stand to benefit. In other words, short-term macro fears could translate into long-term opportunity. From a technical standpoint, the pullback brought IREN back into a familiar range. The stock briefly tested support around $59, which aligns closely with its prior breakout zone from earlier this month. Buyers did step in during the final hour of trading, helping the stock recover slightly from its intraday lows. Volume was elevated but not extreme, suggesting that most of the selling was driven by automated flows rather than panic. If the stock can stabilize above $58 or $59 early next week, it would confirm that this area remains a strong support level. The next resistance remains near $65, followed by $70, which still corresponds with analyst targets from firms like Bernstein and IREN Research. Those analysts remain optimistic. Bernstein has reiterated its $75 price target, citing IREN's accelerating AI cloud monetization and its efficient cost structure. IREN continues to rate the stock a buy, emphasizing its early mover advantage as a preferred Nvidia partner. Both firms have pointed out that IREN's hybrid model, combining Bitcoin mining cash flow with high-growth AI infrastructure, gives it a uniquely balanced risk profile. That combination of steady cash generation and scalable recurring revenue potential is rare in this market, and it's exactly why institutional investors have continued to accumulate the stock on dips. Let's also revisit the fundamentals that make this company so interesting. IREN has already begun to transform itself from a traditional mining firm into a full-scale AI compute provider. Its GPU deployment strategy, supported by the $875 million in convertible notes announced earlier this month, gives it the funding flexibility to expand aggressively. The market initially viewed that note offering with caution, but sentiment has shifted. Investors now see it as strategic growth capital, money that will be used to build new capacity, secure additional GPUs, and accelerate contract delivery timelines. The ability to raise nearly $1 billion in a volatile market is itself a testament to the confidence institutions have in IREN's long-term business plan. In the AI cloud division, IREN continues to work towards scaling its infrastructure to 100,000 GPUs, supported by roughly 2,900 megawatts of total power capacity. That kind of scale could place it among the largest independent AI compute providers in North America within the next year. Each additional GPU deployed increases both its revenue potential and its pricing leverage with clients. As utilization rises and operating efficiency improves, margins should expand, supporting a stronger earnings trajectory over the next several quarters. None of those fundamentals were affected by today's market turbulence. The company's balance sheet also remains in good shape. Mining operations continue to generate positive cash flow, providing a steady foundation beneath the newer AI cloud business. The Bitcoin market itself has stabilized, and while it no longer drives the narrative for IREN, it remains an important complementary revenue stream that helps fund expansion without excessive equity dilution. This dual-engine structure, AI growth on one side, mining stability on the other, is what gives IREN its resilience. When one side of the business faces macro pressure, the other provides support. That's part of why long-term investors view dips like today's as opportunities rather than warning signs. From a sentiment perspective, short interest remains around 10 to 12% of the float. That's enough to add volatility on days like this, but also enough to provide fuel for rebounds. As the stock stabilizes and starts to move higher again, short covering can accelerate the recovery. That dynamic has played out multiple times over the past 2 months, and there's little reason to think it won't repeat. Looking ahead, the key question for next week is how quickly the broader market digests the trade headlines. If tensions cool or policymakers clarify that export restrictions will be narrow in scope, tech and AI infrastructure names could bounce back quickly. Historically, after trade-related sell-offs, the recovery in high-quality growth stocks tends to be fast and decisive. For IREN specifically, the next few weeks will likely shift attention back toward execution, how quickly the company ramps revenue from its new AI cloud contracts and how efficiently it deploys its next wave of GPUs. Each update on utilization or customer growth could serve as a new catalyst. It's also worth noting that even after today's decline, the weekly chart still shows a net gain. The stock opened the week around $57 and remains up for the 5-day period. That's a remarkable performance given how volatile the broader market has been. It tells you that the longer-term trend remains intact. Stocks in sustained uptrends often experience 1 or 2 sharp down days for every 10 strong ones, and this looks like one of those moments. The key is whether buyers step back in early next week, and based on past behavior, that seems likely. For investors with a medium to long-term horizon, today's weakness may actually be an opportunity. The underlying growth story hasn't changed. The demand for AI compute continues to grow exponentially, and IREN is one of the few companies positioned to meet that demand with large-scale, energy-efficient capacity. If anything, the trade war headlines underscore the importance of having domestic AI infrastructure. Companies and governments alike will be looking to secure compute power within borders, and that could drive more business toward firms like IREN in the months ahead. In short, today's pullback looks more like noise than signal. The fundamentals remain strong, the growth trajectory is clear, and the long-term narrative hasn't wavered. The same factors that fueled the rally earlier this month, AI cloud expansion, Nvidia alignment, and strategic capital access, are still in place. The market simply needed to digest some macro uncertainty heading into the weekend. So as we wrap up the week, the message is simple. Yes, IREN fell 6% today, but it's coming off a multi-week rally, it remains well above its breakout zone, and the company's fundamentals continue to improve. The short-term volatility driven by trade headlines doesn't change the bigger story. If anything, it highlights how sensitive the market is to fear, and how quickly that fear can create opportunities for patient investors. The bottom line: IREN remains one of the strongest AI infrastructure plays on the market. The sell-off today was broad, indiscriminate, and macro-driven, but the long-term story remains one of scale, innovation, and continued transformation. The company continues to build capacity, lock in contracts, and position itself at the heart of the AI revolution. Once the noise fades, the strength behind that story will reassert itself, just as it has after every pullback so far.